Good evening and welcome, everyone. Thank you for joining us this evening for the third webinar of the Your Pathway to Home Ownership webinar series with Bank of the West. Today, we will be presenting on money management, planning, and budgeting. I'm Suhey Mojica, your Senior Program Coordinator of Business and Assets of the San Pablo EDC, and presenting with me tonight will be Emma Biggie from Bank of the West. But before we get started, a few housekeeping items. Today's webinar is being recorded and will be available for on-demand viewing at www.sanpabloedc.org and on our YouTube channel. To submit your questions, please use the Q&A box, which is located at the bottom of your screen. We will answer them during and at the end of the webinar. You can also use the chat box. And please keep in mind that participants are in view only mode. You will not be on camera and you will not be able to speak. So if you do have a question, I do recommend that you put it in the chat box or in the Q&A box, and we will get to you as the order that we receive them. But before we get started with our presenter tonight, I just wanted to give you a little bit of information on what the San Pablo Economic Development Corporation does. We are a full service organization for economic growth in Contra Costa County. We are here to help you establish the critical connections you need to succeed in our diverse business and home ecosystem. San Pablo EDC also provides a broad range of affordable housing opportunities and services to enable low to moderate income residents to gain better housing and financial stability. We also offer various workforce programs, from career training funding, childcare funding for working residents, on-the-job training, and much more. I will have my contact information at the end of this presentation, so if anyone would like to get in touch with me or with someone from Bank of the West, we will have that contact information at the end of the webinar. And just before we get started with our presenter, this presentation and this webinar was possible with the help of our wonderful partner, Bank of the West. We are grateful for their partnership and collaboration with San Pablo EDC. Our presenter today is Emma Biggie from Bank of the West. She is a VP Community Lending and Diverse Markets Business Development Officer, and she will be going over most of the critical information that she will be sharing with you today. And with no further ado, I'm going to go ahead and give the screen back to Emma. Good evening, Emma. It's all yours now.
Thank you, Sung-hee. Good evening, everybody. Welcome to the third week of the workshop, Money Management, Planning, and Budgeting. Tonight, we actually have a lot to share, especially related to our actual realistic routine, day in, day out life. So without further ado, let's start it. Sung-hee, I can share the screen, right?
Yes, you can.
Okay, thank you. I'm going to let's do the, is that okay?
Yep, we can.
Okay.
Thank you.
Yeah, thank you. So let's start it with, because we're money management, a lot of time is really talking about the money, either the money we have or either the money we do not have, but we want to have. So that's started with some questions. I will have everybody looking at this true and false type of pre-testing, just to give everybody's some idea what we're talking about today. So if you receive public benefit, you cannot save money. Here, the tip is public benefit. That means is you receive either is a social security or certain government, city subsidize some program to receive money. So can we receive money if we are on that type of income or benefit? True or false? Saving money is a foundation of a financial health. Small amount can make a big difference over time. Is this true or false? So I'm not going to say is true or false. I want to put on the table for everybody start thinking about it. Building saving is only helpful if you can save at least $2,000. This one specifically, I gave a number, 2,000. Well, how about the $2? How about the 20? How about the 200? So those are questions out there for our class people to think about. Now, let's say, what is the saving? Before we go into what is the saving, I want to say the key takeaway for this session is we basically need to set some money every time we got an income, regardless what type of income we have, and do that with regularly. In other words, is not just one time. We actually set time schedule and even a small amount. That's related to the beginning. The question we say is, can we only do 2,000 or even this $20 is going to be a good amount to start with the saving word. And also, regardless what amount, if we start forming this saving habit, the big differences will happen at the end. So what does saving mean? Let's go dive in for what's the saving. Just give me a second. I think I have a chat. Thank you, Sung-hee. So what is a saving? Is that a saving just you save what you didn't spend? Saving is set aside money today for the future. Now, to build saving, that's actually has two sides of a story. Either we save money, we don't spend, or we spend less. You see, the second piece, a lot of people said, well, that's not a saving. That is a saving, because if we spend less, of course, we're going to have a surplus money in our pocket. That's also a saving. So either way, it's the saving. Why save money? Save money. First of all, we can achieve some goals. These goals are purely related to financial goals. This financial goal can be, we want to have a big purchase. When Sung-hee opened up the workshop, we're talking about home ownership. Home purchasing is a big purchase, right? So in order to buy some big item, we need to start saving money, either for some cost related to that big purchase, or to consider to borrow money for that big purchases, and then using the saving to supplement for the payback. So that's the goal for us. Also, education. That's another thing. Nowadays, education is no cheap. And especially the student loan is getting expensive. So saving money for good education and related to extended for a bright future. So those are the big goals. Of course, saving, building wealth, emergencies. Well, the most important thing is peace of mind. This is a lot of people say, well, saving is, today I saving $20 is kind of is a small amount. Even with a goal down the road or something is in the future will make me feel I'm secure because I build up the next and to support in the future, because the future full of uncertainty. How are we going to coping with the uncertainty happen in the future? So peace of mind is very, very important. we just went through the pandemic. We're still in that. Well, I don't think we never get out of it, but because the past 2 years, the big starting of this pandemic and bring in a lot of moment, we start to question ourselves because the life is changing, the job is changing, our health is changing, everything is changing. We're literally looking at our life in a different light. So peace of mind is for the future, and dealing with this type of situation is very, very important. Finding money to save, try it. Well, because we are doing a seminar, this topic actually leave us a lot of hand-on practices. We really need to see where we can save. So the presentation is quite long, but I'm going to jam through and skip some certain practices, is go to the concept part. If anybody has any questions, please leave in the chat. And also, from time to time, I'm going to ask some questions to really checking how we understand the money management, about the saving, about budgeting, about the planning. So finding money to save, the first example is, I'm just quickly read this. Tamara finds money to save. Tamara works as a local retail store. Her hours vary from week to week. From months, it's a struggle to pay her rent and a utility bill. While growing up, Tamara saw her grandma set aside part of her paycheck every Friday at the bank. She thinks it's a time to start saving money, but doesn't know where to start. Well, this is something I put on the floor. We started thinking, is this something situation we feel familiar? This type of situation probably can apply to all of us in this room, one way or the other, one time in our lifetime. So we all probably been there, went through that, done that. So this is not some foreign, but for this, we can give this a case, a new light to say, hey, if I can help this person to save money, where I can start. Now, a lot of people to say, okay, since you are going to from a paycheck to paycheck, first is to have the money directly saving in the bank. We have to using the bank or using the depository financial institution to manage that money, right? We're not going to have that money lay around loosely as a cash. Believe it or not, if we have loose cash around, do you realize the money goes quicker? Why? Because we do not have control of that. Can be, we just convince ourselves and to say, hey, here's a $2 for this, and then there's $5 for grocery, and then there's another $2. Kids want to see, hey, I find some new toy I would like to buy, and then the next thing turn around, the pet food needs something, so the money goes out. So with that said, for loose cash, that's a dangerous way to handle that. So we would rather to put all the money in the pool and to have a one place hold it, and then we start to make a plan together. And that's why here is we need to find the station to save those money, and then we're going to working on our planning. To working on our planning, first thing is where to build our savings. Saving options to choose where to build savings has advantages and disadvantages. Many advantages, each one if we choose some certain options, definitely each one has a certain pros and cons, right? So here are some discussions for the saving. A lot of people say, well, I like seeing my money. I want to keep it at home. The other one said, well, I like money. I want to keep the money, but my hands is kind of like, too relaxed. Easy for me to give money away as spending. So I would like to have my family people, other people to help me to protect that money. So I will let them to guard the money. And then the rest of those we're talking about to using the financial institution to either get the card or get accounts or get the savings account or checking account to manage money. Well, let's look at each one of them and to look at it, what it is. If we're going to save that at home, all the good thing is there's no food fees, there's no rules, and nobody telling us what to do with that money. We're the master. It's very convenient, and we want to use it, we use it. But guess what? The big disadvantage is number one. If we do not have a plan, the money can be done very quickly. And also the other things we do need to consider can be stolen, lost, or lost even in something is unpredictable, such as natural disasters. And there's one thing. If the money is easy for us to access, remember the rule. It's also maybe easy for other people to put hands on that money. So just be careful of that. Number two, if we want to entrust somebody else to take care of our money, still easy access, no fees, no rules. Probably we just by words we say, hey, I need the money, give me some money. There's no additional cost to maintain because we trust these other people. The other people say, I would love to do this. Well, guess what? Still apply to the rule previously we talked about it. The money is easy for us to access, is money too easy for somebody else's to access. And especially in this situation, we entrusted somebody else to guard it. So the first question is the relationship. The trust is are we sure the trust is 100% tight? The people will handle the money with a full moral standard? And that's question mark. We're not going to make any judgment. I just put it out there. Okay. We know, let our hearts to tell us, do we really trust that relationship? And because here is the thing, money can save us, money can help us, money can help anybody else. And if our guardians have run into some situation, are they going to hold tight the moral standard to still be the custodian, help the people to manage their money and without attempting to using it? What I'm talking about, this is related to family relationship, friends relationship, not really the signed agreement with the financial institution, the legal custodian, because the legal custodian does have a legal, what do we say, fiduciary right, but this one, it doesn't have that. So that's something there. And a prepaid card. So prepaid card is a good thing for us to easy to get. It can be electronic, is convenient, and also can be directly deposit the wages to the card or automatically move the funds from the cards to the saving. Those are the good things. But their disadvantage is all the card services, we do looking at it to pay fees. So here is the thing, compared to the previous money management, is if we're talking about entrusted to put the money in our own hands or in our family people's hand, there's no fees. We relied on pure understanding the personal relationship. But this, if we're using the third-party services, we got to pay the service fee. Now, once the fee involved, we really need to looking at it for the fee to manage our money for a long term. Is that cost effective? Because we may pay more fees to get the money managed instead of we have ourselves to manage. In other words, is we actually losing money to have somebody to manage the money, or using the vehicle to handle the money. So those are something to looking for it, look at it, watch for it, and also be careful if we're using the financial services. We also need to see the insurance, the protection, what type of a protection we have for the money. Needless to say, this is the same thing apply to if we are going to use the banking system. There's advantages, there's disadvantages. The most advantages is you really get channel into the financial system, because using the banking system, I'm talking about any bank, any financial institution handle our money, big or small. We really put ourselves into the financial capitalism system. For doing that, sooner or later, more or less, we are going to intended to understand some rules, some knowledge about money. So that's the good part. That's a really big surplus for using the bank system. But there's a disadvantage too. We also bear in mind there can be mismanagement. Oh, this has happened all the time. So that's why as a consumer, we need to understand what, that's why we need to come to the class and really to say, okay, this is something, is not a guess, is not what I think, is not what I feel. This is the reality. Because of a reality, we need to have that mindset to be educated, to understand if something doesn't feel right, that's probably not right. And if it's not right, we need to do investigation. We need to put ourselves in the position to be protected. And if we are not protected, we need to seeking help to get the protection. Okay, so that's something about saving, more into a savings account. The most important thing for saving, just to remember, any vehicles we're talking about saving, the bottom line as a consumer, we need to looking at whether the savings will build some interest for us. In other words, is whatever the money we put out there for storage, will that money going to generate more money for us? This is the big thing we're talking about, the saving. Other places for saving, we already know is like CDs. That's just the vehicles, the name a few. We already know retirement funds, the stocks, and the investment, and also the CDs, the certificate of deposit. That's basically is a timely saving a vehicle for us to store some money, not use the money for fairly some time, and the money will give us some investment return. So that's something we got to understand, what is the saving. So we talked about a little bit about the saving space. Now let's go to some questions. Do we save money now? Are we interested to save money now? The second way is right now, after we talk about the saving, should we start the saving right now regularly? And then if we're answer to those two, no, well, we want to know why is no. And because it's talking about the saving, we already know fundamental things is saving money is a big thing to start something big later. And also start a saving is the first step for planning. Because without a saving, planning make no sense. Because we're planning something with empty hand. So we're not even motivated to do something, right? Once we start saving money, that's kind of, I gave you a seed to grow something out of it. So first thing, saving is everything, the beginning point. So if you do save, where do you save your money? And what do you save for? That's some questions I'm on the floor for you to think about it. This slide is basically gave us some tools to identify the financial institution, what type of institution is going to give us protection. You may notice that a lot of people actually, if you go to bank, if you go to any depository financial institutions, you will see some of those stickers, either as on their door or on the teller line. A lot of people say, oh, what's the difference? I do see them. FDIC, everybody even know that. FDIC is a Federal Deposit Insurance Corporation. And then what's the difference for the other one? So basically, there's two stickers for two major depository financial institutions. FDIC majorly for banking, banks. NCUA is major for credit union. A lot of people say why? Because banks are for profit. So basically, as a bank, are private sector. But a credit union actually is a non-profit sector. So the business management model is different. And then your saving can be different too. So with that said, we need to identify the channel where we want to put the money in and what type of a benefit we can get out of it. Because here's the thing, FDIC insured, this is the FDIC, the private sector, the insurance protection, the both protection for the money is up to 250,000. If you have the money into this type of a financial institution, something happened to the bank, your money is your money. So regardless, the bank is go bankruptcy or something, the money is going to be insured and you will get your money back. So this is something I want to ease a lot of people's mind. We actually nowadays see a lot of people start thinking about this. Hey, I don't trust the bank anymore because, they do something and I gave my money to them and the money got gone. Okay, in United States, under this law, consumer right is protection is there. So your money is actually safe. And that's give you something to think about it is if everybody know that old saying said is do not put all the eggs in the one bucket. Why? Because if the bucket is a hole on the bottom, so the whole eggs are gone, right? But if we scattered, and guess what? You are going to be assured, you are going to be secure. The money is secure. So that's actually applied to this situation too. So that's just to give you some knowledge about the industry. Any questions so far?
We don't have any questions so far, Emma.
Okay, thank you. Talking about the saving, we are looking at interest and compounding. So this is the two concepts that we definitely need to think about it because saving, like I said, saving is not just to find a place to save the money. The saving, the majority thing is not only find a place for the money to store there for the future, but also to see whether this money can generate some profit or benefit for us, because money itself is not stand still, actually is going to deteriorating. Because why? We know the economic scale, the inflation, the economic cycle. So the money, either they're going to gain profit or they are going to losing it. They are not a standstill, just like a perfect furniture there. So for anybody start thinking about the saving one way or the other, you do need to see the money will work for you. That's something we're talking about, the whole savings concept. Okay, so talking about the interest, that's the money we can generate from the money we installed in some financial institution, and they come in with as profit as a percentage. And also bear in mind, any revenues from the monetary savings are having tax consequences. A lot of people may say, hey, I put a saving in some places, I may not need to, I can avoid a lot of tax consequences. We need to stress that right here 100 million times is any monetary gain is going to have tax consequences. The more you gain, the more taxes can be. So that's how the society, that's how the rule made. So we cannot get away from it. This is just a simple example to tell us if we're going to save money in the under the mattress, or using the financial system to saving the money, what type of benefit we can get. Remember at the beginning, talking about a saving money, saving $1 each time, one step each time, we can walk 1,000,000 miles. So that's just something, it's a simple put here. If you put a 5,000 under the mattress, 10 years later, you only have 1,000. Believe it or not, after 10 years, this 1,000 probably not worth 1,000. But if you put it into some vehicle, we're just using bank account as the, I would say, showcase to tell everybody how this work, conceptually how this work. But you can do, this bank account can be enlarged to the concept is any investment vehicle. And you will see today, 5 years, you're going to, if you put it into the account, business account, 5 years, the money is just by simple 2% interest, they can accumulate 5 years, will be grow for extra $100. And then for 10 years, oh, there's extra 200 something. So a lot of people say, well, that's too small. Hey, for us to thinking about a saving, we're talking about a baby step. We're talking about a fundamental. At this moment, we are stay on the fundamental thing. We want to helping people to form this habit, this concept, this concept in our mind. Saving is life itself. It's not, saving is just like we want to spending something, is part of that. Remember at the beginning, we say saving is a store money somewhere, but also flip side is spend less. So that's something we want to start to helping people to form that idea, because nowadays, a lot of people being stimulated by the material in our system, we got to buy this, we got to own that. So that type of like, well, yeah, it's good for the economy, good for the merchants, but how about us? How about our future? We gotta, one way we live the life, but also we also need to think about the future. We also live the future. So don't forget that. That's something, the fundamental thing we want to pass the idea here. This is a more example for, you know, if we're under the mattress, how much the money can grow. The more we're thinking about the saving, the more we are going to say the growth. That's the whole concept. Annual percentage yield, this is the term for the people started thinking, need to understand, is reflect amount of interest on the annually basis. So basically is all your earned money together versus your beginning to start saving, how much growth you have there, and convert it into a percentage rate. So if you beginning, you save 100, you started with $100, and by the end of the year, you have 150. So what's your growth? Your growth is 50%. So that's something, it's just the basic math for us to understand the financial concept there. And also in the finance industry, there's we call it is a rule of 72. It's a formula. So basically is estimate how long it will take for money to double in value. So the double in value is divided to 72 by interest rate. Result is estimated the number of years to double the money, assuming no change in interest, no deposit or withdrawal. So this is the baseline, base formula. Let's look at the calculation. I wanted everybody to take this with you. If you have a camera, you can snapshot this. This is actually is a fun thing. We can sit at home and do some of this math and give you some thought to say, hey, I have this much money in the bank. If we do this, because here's the thing, if you have the money in the savings vehicle and you know how much interest you earn, and you using this formula to calculate, and you can maneuver the formula, you can increase the money, you can decrease the money, and to see how much you can gain out of it. This is a really fun. That's basically is how fun we can have with our finances. So example one, $50 in the savings account, which is easy for us, $50, with 2% interest rate, which is, I know 2% sometimes it depends on your investment vehicle. Nowadays, today's date, the 2% sounds like high, too high, because we're in the inflation right now. But still, you can using your actual interest earned in the bank account and accumulate, because it's, remember this, the bottom line, if you have that money in your hand under the mattress, that money, number one, can be gone quickly. Number two, are not saving, are not giving you anything. But even for 1%, even for 0.1%, that's still growing. So that's the concept we want to take away. So $50, 2%, 72 divided by 2 and 36. That's 36 is what? Is 36 is the years. And then it would take about 36 years for $50 to double to $100. And then the example two, what interest rate would double your money in 10 years? That's another way to say 72 divided by 10 is 0.072 or 7.2%. Need to earn about 7.2 to double your money in 10 years. So why we're showing this? This is almost gave the bank in your hand. You become a banker for your own money. We can calculate this to looking at our money to say, hey, is this worth it? I put this money into this vehicle and saving in this place. Or I can put something in this, maybe 0.3%. Then I can put something in the 1%. I can put another money into the other vehicle, earn 0.5%. All those money is a start to working for you with the time progress. Guess what? This is the big fundamental concept of manage money in the portfolio. You become your own money manager. So, any questions?
No questions, Emma.
Okay, doke. Now move on. Remember the takeaway, saving options before we choose where we build our savings. And also, just remember, we're talking about the saving money, budgeting and planning. That's all coming from saving. Because if we're planning something, budgeting is the saving. Planning is coming from that, because if we don't have a budgeting, if we do not have a saving, the planning is make no sense. Just bear that in mind. The savings for unexpected expenses. This is a very, very important. A lot of people, when we do the budgeting, when we do planning, let's talk about is at this moment, we have some money we can save, or we have some basic, we started saving, and then we started planning. What do we really plan? Except besides, we set all those goals when we started. We set all those goals for big purchases, for education, and for also advancing something. What I say advancing, for example, we open the business, we start some thing we like, entrepreneurship, right? So if we planning those, sounds like those type of occasion is more bigger, more have some profound, meaningful impact to our life. But remember, when we are being realistic in real life, a lot of time our spending money, our money being spent actually on something we do not have a plan. It's happened unexpectedly. And those unexpected incidents can cost us fortune. So besides we are going to plan something is on the real life track, is fundamental things and has a profound future, we also need have something to planning for unexpected. In other words, is to reduce the risk for losing money. That's something is also going to be part of the saving. Because what life happens, because unexpected things can occur and can happen. Well, here is an exercise. If we in real life, I probably in the classroom, we're going to have open discussion about is if we have some money and what we can plan for unexpected things. What are our thinking about that? This is normally is under what we call is a saving money, saving emergency saving fund. This emergency, a lot of people said, well, I'm the emergency fund is just for medical. Oh, that's beyond that. Medical is just one part of this emergency, right? A lot of people, whoa, emergency is related to the medical because something happened. If somebody is hurt or somebody is injured, the medical piece are coming into the places. But how about nobody hurt, but we lose the asset? That's also lose our personal belongings. That's also our emergencies. For that type of a situation, how are we going to handle that, right? So we do need to have a safety net to cover that. And believe it or not, as I said, all these unexpected incidents, because they don't happen often, and they may not in our mind often. So guess what? When we're really doing the plan, we actually do not give enough thought about the idea. So in this case, we need to think long. We need thinking further. We need thinking deeper. Besides, if we set up emergency funds, savings fund, the money is all ours. We don't need to worry about it. Nobody is going to take the money. But the major thing is the money has to be there for the shield, for our protection. And to build up that shield, build up that protection, need a little bit of thought, need a little bit of brain work, and need a little bit commitment with the time. Because that is very important step to improve financial health and stability. Emergency fund at the beginning, we can say, oh, I'm going to set aside this money for any unexpected things happen. But if we do not have unexpected things happen, this money is going to be our savings. It's become our routine savings. Is that right? So that's almost another way we tell ourselves, even is force ourselves to start saving. Because if we save just for regular thing, we may say, okay, I'm just using the example. In 6 months, I want to buy a bicycle. Nowadays, what's the bicycle? Sohee, what's nowadays bicycle's price? 500, 600?
That's a good one. I don't know.
Throw a number to me. So if we say, hey, we save for this bicycle. The bicycle is $500. Now, if it's a $500 each month, we save 50. Take us 10 months to do the 500, right? Thinking about this concept is exactly what we just talked about it. We got to have a goal. We do have a goal. We're going to buy a bicycle. And the bicycle is a future goal. When we have the bicycle, will provide us a convenience for transportation, right? And also for our health, to do exercise. So there's a lot of a benefit. But just for thinking about the savings plan, we have this goal, we have this plan, and we start saving. Take 10 months. Well, let's do a simple way. Because it's a bicycle, we know every month we're going to discipline for $50. But if we say, well, because it's a bicycle, if this month I have 2 birthdays go to celebrate, I'm using this 50 for this month. I'm not saving that. Next month, I gave extra 50 and to 100. You see this flexibility? We actually is not really stay with our plan. But guess what? If we're talking about the emergency funding, this emergency is going to, for our, I would not, put a bad things there, but just in case, we will say, well, I'm going to say we live in the flood zone area. This area may have a flood every year in the raining season. And I know the backyard is going to be flooded. It doesn't matter I own the house or not, but the backyard is going to be flooded and the water is going to get into the house, will get some property damagement. So for that, I need to prepare that. And you know that, and you say, I'm going to each month I put a $20 in that emergency fund. And regardless, rain and shine, I'm not going to change that, the $20. And guess what? That $20 is going to steady grow. And if you don't have a flood incident, that $20 is just to grow like your regular saving, right? So that's why, that's the thing is, no matter is regular saving or emergency saving, is somewhat give us a security. Emergency saving is the most. Why? Because they are not only just for saving purpose, they are also have a purpose for the future protection. This is the example for, say, my emergency saving fund plan. Saving fund plan, first, you got to set a goal for the emergency. What do you put the money away? How much? Talking about the finances, we always talk about the numbers. We cannot get away from numbers. Without the numbers, we're not talking about the finances. So the numbers either is positive or negative, right? If it's a break even, we don't have anything. For positive and negative, we got to manage one way or the other. So this is for positive. We're going to look at it, what we're going to do with that. Now, on the same note, let's talk about budgeting. What is a budgeting? Budgeting is basically we're going to cover the plan and live with it and leave the plan within our means. That means is what we make is going to match what we're going to spend, what we're going to get it. So for that piece, we definitely need to thinking when we make a savings plan, we need to be very specific. That's number one. That's why the exercise here is showing a lot of numbers there. Why it has to be a number? Because it's very specific. This help us to know what we're saving every month or saving every day, every week. So that's the thing. The goal has to be very specific. And also the goal has to be realistic. If we're living on a paycheck each week is 1,000, and then you come in, you tell me, said, hey, Emma, I listen what you said. I think about it. I feel this is a good idea. Tomorrow is Wednesday. This Friday, I'm going to have a paycheck. I'm going to save, let's say, $800 for this paycheck. And I leave $200 for living the next whole week. Is that a realistic? Probably if you only live on the, I don't even think is a McDonald's can help to live the whole week with $200 because under today's weather. And beyond that, we're talking about our, health and the nutrition and everything. So we got to be realistic. That's something there. And also, this is a part of you thinking about being realistic. Anticipate the changes to the incomes to your expenses, because the income is what we make. And the expenses is what we're going to send it out. We're going to spending. We're going to give out. So this coming in and going out, those two numbers has to make sense. For saving, we always thinking to gain more and out less. So that's some fundamental. And also because to achieve coming in more and goes out less, that's need some technique to handle the situation. We got to cut it, analyzing what we have. We got to thinking about what are the items is necessary to spend. What are the items is need? What are the items we want? Because want is normally for the actual to satisfy some certain desire. Is not, if we're not satisfied that desire, the life stops. No, the life is still going on. It's just we may not be happier, but we're happy. We can live life today as what we have right now. That's what we have for need. But what we want is a little bit extra. Is that extra is necessary? That's the major thing. And how much is necessary? That's another thing we need to thinking about budgeting and planning. There's a lot of, this is another showcase for how to analyzing. Estimation is what type of income we can get more money in. This is talking about money in and money out. What type of money we can get in and to increase our earnings. And then we go to how much more we can spend and how much more we can cut for unexpected expenses. Saving for the goal, very important. We have to have a goal for saving, and with saving started and then planning, right? Create a plan to save money for your goal. Just remember, to start saving and planning and achieving the goal. This is a very, very important. Regardless, for finances, saving is the foundation of everything. With that said, is that our time is how's our time goes?
Yes, we are at 5:57, and so we only have 3 minutes left.
Okay, I think at this moment, we pretty much covered some fundamental thing. There's a lot of information in this slide. Can be a lot of exercise and really just to testing our understanding about the saving, budgeting, and planning. But I pretty much gave everybody's the basic. The more exercise, just enforce that idea in our mind and really open mind to looking at this concept in a different scenario, in a different life situation. So just remember, we live a real life. I don't live Song-hee's life. Song-hee doesn't live my life. So a lot of saving concepts, saving ideas, each person are so different. But we got to handle that in a very private situation. With that said, I concluded today's the understanding about money management, the planning and the saving. Any questions? No questions?
Yes, we do have 3 questions.
Go ahead.
Let me just go ahead and share my screen so I can share the rest of the presentation today. Second here. Okay, so the first question is, how many years of credit history does one need for a bank to offer either a credit card or a loan?
Very good question. Normally, when we're talking about home purchases, we would like to see you have 2 years, at least 2 years credit history.
Okay, thank you for that. The second question is, how many do you need to save for a down payment on a mortgage loan?
That's even better. That's even better. Well, nowadays it depends on how big the house we plan to purchase. And because down payment is a partial percentage of your house price. If the house is $500,000 for 3% of that, I gave that back to you, you can calculate 3% of $500,000. That's how much the saving you have.
Okay, and would you say 3% is the average of what most banks will ask? And obviously, the more, the better, I imagine, because the lower.
That's correct. That's a very, but 3%, that's the starting point.
It's like
because exactly the reason for that, why we see it's a 3% is not this 3% is we just get it and clip it from the air, right? So currently the popular Fannie Mae, Freddie Mac, especially the first-time home buyers program, the program itself does require there's a 3% down payment. Read my lips if you can. This is 3% because it's a first-time home buyer, sometimes may not need to be totally coming from the purchase home buyer's pocket. You can actually seeking other sources, money help to make up that 3%.
Thank you for that, Emma. Yes, as I'm just going to piggyback on what Emma said. Yes, there's some that you, as she mentioned, there are some guidelines that you may need to have a certain percentage of your own down payment. But just like Emma said, Bank of the West has some first-time home buyer programs that can help with that down payment assistance. And then also at San Pablo EBC, we administer a few down payment assistance programs. You are definitely more than welcome at the end of this presentation. At the last slide, I will have Bank of the West contact and then also mine if you want to know more about what this entails. We've had some webinars in the past that are very specific to those type of programs, but that was a good question because it sort of led into other ways of saving for down payment assistance or receiving that type of help. The third and last question, Emma, is does Bank of the West offer student loans or help with student loans?
Yes. Yes, because a student loan actually is government loan. Did you know that? Student loan is government loan. So basically is the bank is just an intermediate to administrator for that program. So definitely, but nowadays a student loan more channeled into a certain channel. So normally you can get a student loan first. A lot of the school offer the student loan resources. What I want to give tips for the student loan is you do need to read a contract, because nowadays the money is from government, but because the money is so big a burden, a lot of people actually default on student loan. So government didn't get the money back. So that's now the student loan is getting expensive.
Okay.
So just to be careful, read a contract, and also especially a lot of those student loans actually is at adjustable rate loan. So you need to read the notes to really make sure what you get and
Okay.
what's the term of the loan.
Okay, so that's good advice. Always with anything, read the contract, read what it, what it's in detail, what you're going to be required and what's your responsibility. As Emma mentioned, that's very important with anything that you sign a contract, whether it's a credit card, a loan, any type of loan.
Yes.
Yeah.
Yes.
So
Yes.
car loan, a student loan, a home loan, you want to make sure that you're reading pretty much that you understand it so that when payments are due, you understand what that entails, right?
That's right. And also student loan has a special feature is while you are in the school, the student loan has a deferment period. And that's also part of the contract. You need to read it compared to what school, what subject you study,
Got it.
and how long you have that deferment.
Okay.
Because the deferment actually will help our student to bridge the time between the study period, schooling period, and the time you can actually start making money to pay back the loan. So those are the things. Student loan, that's a special feature, is other loans, they don't have it. So
Okay.
just to be careful.
Okay, so just make sure you read the contract and you understand what's expected of you as you take out any loan. And so thank you. That was it for questions, Emma. I just want to let everyone know that we do have more additional webinars for the remainder of the year with Bank of the West. This is a first-time home buyer pathway to home ownership webinar series that we've created with Bank of the West. Where we talk about topics such as the one that we spoke earlier today and budgeting and finances, which basically get you closer to your goal if your goal is to purchase your first home. There's other things that Bank of the West also does. So I will, before I go to the next slide, Our next webinar will be in July. It's usually towards the end of every month, and it's always around the same time. So if you guys can join us, the next one, we're going to talk about home equities explained. So we're gonna, Bank of the West will be explaining how home equities work, so that you have a better idea once you do become a homeowner, what to expect and what opportunities are there if you were to look at a home equity in the future. So with that, I would like to say that if you wanted to get in contact with anyone at Bank of the West, you can definitely start with Maribeth Guevara. She could definitely be of assistance when it comes to anything that is mortgage related. But if you have any other questions or anything that you would like to have the opportunity to see what Bank of the West can help you with, you can definitely reach out to me and I can put you in connection with someone there that can help you with the specific need that you have. So with that, I would like to thank our presenter, Emma Biggie, today for sharing such great information as always and resources. And thank you to everyone that joined us today. If you do want to follow up again, like I said, our contact information is here on this slide. If for any reason you didn't get a slide and you don't know, you want to go back to it, we will have this on demand for you to watch later. If you wanted to go back to our YouTube channel to read, read any of the slides or look at any of what Miss Emma mentioned here. And so if you wanted to also get in touch with Emma, her phone number is 510, which I think she shared with everyone, 460-8836, Emma Biggie .shi@botw.com. And with that, I would like to thank everyone. Sorry, I am trying to do my next slide here. Please join us and register for our next webinars by visiting our website. And I hope everyone has a wonderful day. Thank you and goodbye. Thank you, Emma.
Thanks, everybody.
Thank you.
Have a good evening.
Bye.
Thanks, Song Hee.
Thank you.
Talk to you soon.
All righty. Bye-bye.
Bye-bye.